Can you hear me? Okay. So tomorrow by this time, I mean, it will be over and it should be good at the end of the day. Ehono, ehono. That is the thing. All right. So welcome, guys, to the session this evening as we look at
Nhyira.
management accounting in that particular case for the examination coming up tomorrow. We also going to be looking at advanced audit and assurance alongside, depending on if any of them join the class, though, in that case. But it depends. I may just focus primarily on the management accounting side of things as we get excited into the discussion. Before I get goosebumps, I want to quickly maybe answer some specific questions if there are any. Those of you joining us on YouTube as well as on LinkedIn, I don't know. Ken, Facebook is not on. Yeah, I can't. It's not appearing here. Why? I don't know. Maybe she didn't add it. That's why. Because I'm seeing just Facebook, sorry, YouTube and LinkedIn here. All right. So those of you on with us on YouTube, please share the video, give us a thumbs up on the video, and let's reach as many students as possible so we can have an interesting discussion tonight. So I'm going to take some quick questions if there are any specific, right? Something you want to pick my brain on. Then we'll have some discussions on a couple of things that we need to revise on as well so we can put ourselves in the position to pass the examination. Yes, Genesis, your hand is up.
Yeah, Israel.
Yes.
It's not a question, but it's just meant to appreciate it over the time. We went for the exam today. Reporting FR was very good,
Oh, okay.
but it's just that we are not been taking your advice. So for me,
You've not been taking my advice.
serious, everything you said, everything came. If I say that, I have not really been putting in time,
I
like you
understand.
demanded from
I
me.
understand. Yeah.
Yes, yes.
Okay.
Yeah, but everything you've been saying exactly. I'll ask him whether Israel you can go with the people that draw the exam.
Eh, feel going. Don't come and put
Thank
me
you.
into
No, I
trouble.
didn't. I didn't use the media to say thank you. No, actually, it's
All
just a
right.
say it's a me was saying oh thank you. You did extremely well, and I keep it all. God bless you and your family. And I know one day we will be a victor. One of these days we'll keep
Amen.
pushing. We'll
Amen.
not give up.
Amen.
Thank you.
Amen. That's great
Thank
to
you.
hear in that regard. When I saw the FR questions, I was like, oh boy, that was an interesting questions there in that case. So, I mean, we hope for the best for you guys, those of you who wrote the paper. Man accounting, any questions for me? Something you want to hit me with, something you want to pick my brain on? Budgeting, variance analysis, specific, right? Not lengthy thing like you should teaching me about budgeting. Debbie, that's not what we are doing here. So something specific you want to pick my brain on, I want to be excited to provide you with some guidelines in that particular case. If there is anything like that, if not to, then I don't know. I can get goosebumps so that we will go and sleep. If we have to go and sleep, who the heck? I will get goosebumps, then we'll go and sleep. For the day, give me a sec. Let's see. Okay. Let me bring my online also.
Yeah,
Yes.
yeah, a walkthrough in respect of quality management and just in time.
I walked through on what? Total quality management.
Total quality management and just in time.
Oh boy. Okay, let's see if I can bring my slide up on this one here. So technically the idea about these two, total quality management. Okay, let's take just in time first because that takes us through the total quality management idea. In a simple language, what happens is that the just in time system is a system. It's also called lean production system. It's a manufacturing system or a system of operating a business where the entity's objective is to keep zero stock, or if anything, keep just a minimal amount of stock. But really, the ultimate goal is to keep zero stock in order to reduce the inventory cost. Why is that? Because the entity believes that it will only order for goods as and when they are ready to be put into the production system. That is when they will order for things. So it means there is no storage cost to be incurred, there is no other cost to be incurred, but just keeping zero stock. Now, we mentioned that in order for the just-in-time system to be possible, there are a number of things that must be in place. Number one, the entity must have a collaborative relationship with its suppliers, because it is important that when we have received an order and we have to meet the order, we place the order and our supplier, we don't have that collaborative relationship with them. So there has to be a collaborative relationship. The suppliers must be reliable. That is another thing there, that anytime we call on them, whatever we need, boom, they're going to bring it to us at the end of the day in that particular case. But then one thing we must understand is that sometimes it will increase the inventory cost. Because if you've bought the inventories and kept in stock yourself, then when you need it, you'll pick it from there. But under the just-in-time system, because you call the supplier as and when the order arises, it is likely that we will buy inventories at above the normal price. That is one of the issues there that we need to understand when we talk about the just-in-time system of manufacturing. But that is generally the idea. Objective is keeping zero stocks, ordering goods only when they are needed for the production system. For it to be possible, collaborative relationship with suppliers, having reliable suppliers at the end of the day. But then it has some limitations, one of which could be the issue in respect of, give me a sec, let me pull this up here. One of which could be in relation to the fact that our inventory purchase cost is likely to be expensive. Number two, if the supplier fails to deliver, it means the entity may not be able to meet the supply, which means we are losing revenue, our goodwill will be affected. So the existence of the business is tied to the reliability of the supplier in that case. And so these are some of the things that we need to understand under the just-in-time system. The total quality management system is a system where the entity wants to achieve zero defect in its production system. In other words, the ultimate goal of total quality management is to increase customer satisfaction and reduce the probability of getting defective goods to the consumer. That is the idea of total quality management. And so whatever we want to do it in such a way that we get it right the first time and we increase customer satisfaction. Well, how do we do that? We do that by ensuring that goods produced go through the necessary procedures and there are no defective outputs that reaches the customer. Now, in order for total quality management to be possible, there are a number of things that must be there. Number one will have to be commitment from the employees, because total quality management has to be a cultural thing, not just a cultural and philosophical thing for the whole organization, and not just an individual's agenda. And so that is crucial there, that it has to be embedded in the organization's culture and all employees are committed to that. That's very important. Number two is that the management must be ready to support the system, because total quality management may require a number of commitments to be made, supervision, training, and development. All that should be made available to ensure that the system is running effectively. But it is important we understand on the overall that when it comes to total quality management, there are also some types of costs that the entity can incur. We have what we call the preventive cost and then the non-preventive cost, or sometimes called the conformance cost in that case. So for instance, an entity incurs cost in respect of inspecting the quality of the product, quality of the finished goods that is going to the customer. That is important. An entity is going to be incurring a cost, for instance, into, let me see if I can maybe pull this up here and show you probably. Let's see if I can pull this up here. Those 4 types of cost specifically, because that is something that is quite interesting. Let's see if I can get it just where I want. Nope. Okay, there we go. This one. Yep. Take me down. Yeah, this one. These costs issues here in respect of total quality management, preventive cost, the cost that the entity incurs to ensure that we don't even get defective output in the first place, training costs, costs that we incur to train our employees to prevent any defective output so they can use materials well, they can use the various systems that has to be used well at the end of the day. And then number 3 is going to be process planning cost. This is the cost incurred in planning a robust system to ensure quality, and then quality improvement issues. So those are under preventive cost, the cost we incur to prevent defective output or defective products getting to the final consumer. Then we have what we call the appraisal cost. These are the costs that we incurred in testing the quality of the product and ensure there are no errors in the production system. And so we have the inspection, testing, quality audit, calibration, and testing equipment. All of those things are issues in respect of appraisal cost. Then internal failure cost. I mean, these are the costs that we incur should there be defective output. It could mean that customers will bring it up, so it has to be refurbished. And so the refurbished cost or the reworking cost, those will be internal failure. Then maybe we have to scrap it, so we have to write that cost off, and we have incurred that cost for free. Nothing can be done in respect of that. So those are the key issues that we can talk about when it comes to the total quality management in that case. So on the overall, that is generally the idea about what I can mention there to you on total quality management there for that.
Thank you.
Okay.
You made mention of conformance cost. You also made mention of preventive cost and non-conformance cost. Can you just a minute throw light on the what do you call it? Where it falls, the conformance cost, preventive cost,
Generally, those are part
and
of cost.
non-conformance.
Those are just part of cost control mechanisms. The conformance costs are simply the cost that the entity would have to be incurred to ensure that things are working in the manner that they are supposed to be working. The non-conformance costs, these are the other costs that the entity would have to be incurred to, after there is a fault or anything, to rework on the product in that case. So that is also another, it's under cost control techniques. It's part of cost control techniques. If we are looking at how we control our cost, we can talk about the conformance cost and the non-conformance cost. What we are incurring, conformance cost, to ensure that systems are running well, procedures are running well within our organization. Non-conformance cost, the additional cost that we have to incur in case there is a default to rework a product, to refurbish a product. Those are some of the things that we can mention there in respect of the non-conformance cost there. Please give me a second. Can you check if anything? Yeah, and make sure it's working. I don't know why, so make sure it's working for me. All right. Sorry, I had to mute.
Is it? Yeah. Is it
Yeah.
yeah, please. It means that in just in time, quality takes precedence over costs. I don't know if from the explanation given, it means that
No,
in the traditional system.
No, not really that quality is taking precedent over cost, because as I said, in the just-in-time system, sometimes we can incur more cost than require. But the reason why probably sometimes quality can be a subject there is because since we are not keeping the inventory, we assume that the supplier is bringing us fresh stocks of inventory, and hence we are likely to get quality raw materials from the customer since they would have a better storage system than ours. So quality input will be coming in. So yes, there is some level of quality in there in that case, but not necessarily that quality is taking precedence over the cost in that case. But there is some element of quality there in that regard.
Which also means that in the just-in-time system, idle time is good.
What is good?
In just-in-time environment, idle time is good.
Not necessarily, because we order as and when it comes. Idle time is not good in any environment, so it can't be good whether we are working. We want to keep things running. So if you have too much idle time, you are paying people who are not working. So it's not good anywhere, irrespective of where we are in that particular case. So those are the things that we can talk about in that case. All right. Any other specific thing for me before I probably get into my discussion? As I mentioned, we'll be running two subjects probably concurrently, because we also have audit on the side, advanced audit on the side. So bear with me. I'm going to be trying to move in between the subjects in the next few minutes. We'll be able to get into a couple of things in that case. Yes, Reginald, your hand is up.
Sure. My question has to do with investment appraisal in the public sector, especially when it has to do with NPV or any other. Let's say NPV, if the NPV is negative, it means that we should not, it won't be prudent to invest in that project. But then you said in the public sector, we should also consider key. I don't remember exactly what you said, but you said that we should say that. But when we say that, we should add that.
Hold up.
Okay.
So the public sector entities, metropolitan, municipal, or district assemblies can undertake profitable ventures, or ventures that are supposed to be self-sufficient or self-financing projects, whilst there are some other projects that they will be undertaking that are not supposed to be making them money, but just to maximize the wealth of the shareholders. So for those kinds of ventures that they expect to be self-financing, okay, maybe they've opened a tourist center, it should be making money. Okay, or they've opened an art gallery, it should be probably self-sufficient, financing itself at the end of the day. So there are certain projects that public sector entities will undertake. If it is not making profits, then they won't undertake it, because it is not something they are doing for the society necessarily. It is just a venture they want to go into, rather than letting private sector entities go into it, because they see it as an investment avenue. So if they are seeing it as an investment avenue, then that is where they will go for the NPV, ARR, IRR to appraise such projects. But in a typical public sector project, that is where we mention the cost benefit analysis, or cost benefit ratio, or the cost outcome analysis, or the cost effectiveness analysis. So you must understand the context of where we are at, and then what is applicable in that particular case. So that is what you need to understand. If it's a profitable project that entity is going into, that one we don't care. If it is NPV, If it is loss-making or negative, certainly they will undertake it. If it is positive, then they will undertake it. But if it is a typical public sector project, like the issues we spoke about, we'll get into some of these things, constructing a hospital, constructing a road, you don't do NPV on road construction before you construct it. So in that case, what the country or the entity will look at is those other methods, cost benefit analysis and those things, because they would want to look at those environments rather than the typical NPV method. So that is the context that you need to look at the discussion in that case.
Okay. Thank you very much. Understood.
Okay. Okay. So it means we good. Let's get excited into the discussion. Now, let me say this before we get goosebumps. Management accounting first, right? We will have theory in the exam hall. My heart is telling me that at this point, you have read all the theories there is to be read, 95%. That is the benchmark. 95% of all the theories, you have read them. That's what my heart is telling me, right? And, this one is half part of my heart is lying. Another half part is saying the truth because, some of you have not read anything. But remember, there will be written questions in the exam hall. And so as you remember, the strategy is when you get to the exam hall tomorrow, I don't care what the heck it's going to come over you, but you're going to read through all the questions and answer all the written questions that you can do best first. I need this to get into your brain very well because that is important than what we are about to discuss. Strategy in the exam hall is key. Because today, after the exam, I've had calls with people and time. That is what they've been concerned about. I'm like, I've told you how you're supposed to approach questions in the exam hall. Yeah, if you do that, then you shouldn't struggle with time. And some people are like, oh, Nhyira, I answered the wrong question. I thought I could do this question. I'm like, and like Genesis was saying a moment ago, right? So please, I don't care who the heck you are. When you get to the exam hall, management accounting, don't let anything come over you. Read through all the questions, take out the theory part, the written questions that will not require calculation. As we mentioned last semester, 47% of the questions didn't require any calculation. Write English for us. That's all the examiner is asking you. That's all. So that is important. The reason why the strategy is going to work for you is because when you're able to take out all the written questions as fast as possible, now you save some time. Then you can approach the questions that you have to read, interpret, and calculate, like the short-term decisions that, relevant cost analysis. That maybe your brofo is not good and I'm not saying relevant cost analysis will be there. Some of you be careful because I'm just using an example. And before we can go and do some skirmishes. So maybe relevant cost analysis is there, right? Then you are reading. It will require time. Budgeting, you are reading the story and working. It will require time. So please, when you get to the exam hall, thou shalt not let anything come over you. Take out the theories first. From there, you can start approaching the calculation part. Because if the examiner should bring written questions up to, say, 40%, and you're able to answer, and you've read well, you've worked on yourself well, you should be able to blow like 30 of that, or 28 of the 40. And that is a good starting point before you come to the calculation areas that will require you to think, to calculate, to punch things, and to be processing a lot of things. So that is my key strategy for you for the management accounting examination. If not, you will be in the toaster. And you don't want to be toasted. So please be mindful of that, all management accounting students. That's the first thing I want to say there, the approach in the exam hall. Once you finish with all the written part, then you just have to answer the other questions as per your understanding and you will be good. You will be good in that case. So that's a key thing I want to highlight before we go. Let me bring up my iPad and let's see. Where is it? Okay, there we go. So let's go quickly. As I said, we have advanced audit and management accounting, so I'll be moving in between. So please bear with me because there is no way we could, have it separate. So bear with me. We're going to be moving in and out. The first thing is in the two subjects. So let me address that one first, ethics. Yes, there is ethics in management accounting. Remember I told you, but ethics in management accounting is different from the way ethics will be answered in advanced audit and assurance. So let's discuss it briefly and then boom, I'll take it over to the advanced audit and assurance people. Management accountants, professional accountants are required to behave in a certain manner that adhere to the fundamental code of conduct, which we call the IFA code of conduct, but ICAG has also adopted that, so it becomes the ICAG code of conduct. If you remember, we mentioned that the professional accountant must be honest and straightforward in all professional dealings, meaning that must exhibit the spirit of integrity, being honest and straightforward in all professional dealings. What does that mean? It means the management accountant or the professional accountant or the auditor cannot be associated with any misleading budget, financial statement, or audit report. Cannot be associated with any falsified document that will mislead stakeholders, and that is shareholders and other stakeholders of the organization. That is the principle of integrity. But also we said that management accountants or auditors are going to be exercising various professional judgment. Let's say you are a management accountant. You have to exercise professional judgment on how many kilograms of material we will need, how many hours of labor we will need, how do we set the bonus scheme for the organization, how do we set the wage rate for the organization. From the auditor's perspective, the auditor must make professional judgment on what should be the materiality of the event, what should be the audit procedure we adopt, what should be the audit approach we undertake. So as professional accountants, we are going to be exercising a lot of professional judgment. The principle of objectivity states that in exercising these professional judgments, the professional accountant must not allow bias, conflict of interest, or undue influence to impair those professional judgments. That is the principle of objectivity. Do not allow bias, favoring one stakeholder over the other, conflict of interest, your own benefit over the objective of the work you are doing, or undue pressure, someone threatening you or saying something negative to you, forcing you or compelling you to do what you shouldn't have done. That is the principle of objectivity. However, as professional accountants, we are going to be coming into contact with essential information. Management accountant in our work, we will be coming into contact with various information. We may see salary of management, we may see the board salary and various other sensitive information of the organization. Auditors, same thing. We are going to be coming across various information about a client entity. However, the principle says that as professional accountants, we must not disclose any essential information about a client entity to third parties without prior approval or where we are required to do so due to professional duty. That is the principle of confidentiality. So you learn to zip your lip. Okay? You learn to zip your lip. That is the principle of confidentiality. Thou shalt only talk only when you are required to, but essential information cannot be disclosed. Now, does it mean the management accountant must always keep quiet? Does it mean the auditor must always keep quiet? No, there are some exceptions where the management accountant can talk and it wouldn't be a breach of confidentiality. The auditor can talk and it wouldn't be a breach of confidentiality. These circumstances will be if it is required by law. So if you have a professional duty to do that, then boom, you can talk. If you're the professional accountant is a key witness in a court proceedings, you don't need a client's permission to say anything. You are before my lord, the judge. So you got to spill the beans and say anything. You are not breaching the law. Or where the entity is seen to be engaged in some illegal, shady activity, mistreating of its employees against the labor law, then you can become a whistleblower and go and tell. Confidentiality. The only rule is that you got to be careful you obtain legal and professional advice before going out with such things. Because either Agbalagba will come after you, or as someone will say, artificial suicide will come and visit you. You will kill your own self without knowing that you've killed yourself already. But that is the idea about confidentiality. Then we said, hey, listen, as professional accountant, you must be competent and carry out your work in a manner that is expected, and that is professional competence and due care. Okay, professional competence and due care. And so we must have the requisite skills, expertise to be able to do the job we are doing. And until you are now in the process of learning. What you are doing now is building your competence. You being shown how things are being done. Due care. That is, you are building your competence, right? Even if you become a chartered accountant, you will still be learning CPD, continuous professional development. Have the requisite skills and expertise for the job, for the assignment that you are supposed to do. And so the rule is this: where a management accountant is told to do something, or the auditor has been invited to do something, and the management accountant or the auditor or the professional accountant doesn't have the skills, the principle of integrity says that you tell your boss, I can't do it. I don't have the skills. I can't do it. That is the principle of integrity. Oh, but they're going to fire me. We don't care. Okay? So that is where self-interest threat comes in. I don't know the thing, but my job is on the line. I cannot lose my job. I cannot disappoint my boss. So what do I do? Okay, so that is where the professional accountant may go out to go and seek advice on the subject matter they are not able to do. But even in such environment, the principle of confidentiality must guide the professional accountant. So 2 levels there. If the professional accountant doesn't have the capacity to do what you're supposed to do. Number 1, integrity. Say that, sir, I'm sorry, you asked me to prepare the budget, but I cannot do this. I'm a newbie. I don't know how the heck this works. Yeah, but self-interest threat will tell you, you can't tell your boss that. So you seek advice outside. All right. Once you are seeking that advice outside, you must make sure that you are not giving out essential information, confidentiality out. Okay? So you're not breaching the confidentiality principle. Then the last one, certainly, is professional behavior. The professional accountant is expected to behave in a manner, carry himself or herself in a manner that brings respect, that doesn't bring shame or disgrace to the company you are, yourself, number 1, the company you are working for, number 2, and then the profession as a whole, number 3. These are the fundamental codes of conduct that we need to understand. Now, ethics in management accounting students, that's 5 marks area, theory. If the examiner gets goosebumps, he will ask you something there, 5 marks. Advanced audit and assurance people, we know minimum of 10 marks here. We need to know about it. But if you remember, we said the professional accountant is not able to behave in a manner that they are expected to behave due to the threats. So we have the self-interest threat, which is where the professional accountant stands to benefit, either directly or indirectly, from the event, and hence may not be able to adhere to the fundamental code of conduct. Then we have the self-review threat. This is where the professional accountant is subject to review something that he or she was involved in putting together or knows the person who prepared it. So for instance, let's say you are the head of finance in the organization and you've prepared the budget for the organization and you are the head of the team, right? So your people prepared it. Then you send it to the board. Then the board gives that to you and say, head of finance, review it. Bro, our department prepared it. I should review it again. That's going to be self-review threat, and your objectivity may be impaired because you will not. It will not be reviewed independently, as it would have been if you were not the one, or your department was not the department that prepared that report. And so that is the self-review threat. Then the advocacy threat is where a professional accountant is promoting the interest of the client entity above or to the point where the objectivity of the professional accountant is impaired. Okay? To the point where the objectivity of the professional accountant is impaired. That is the advocacy threat. So in the audit environment, when the auditor is representing the client to negotiate a loan, when the auditor is appearing to third parties that they are working on behalf of the client entity, those will be advocacy threats. Then certainly familiarity threat, having close business, personal and business relationship with the client entity. And then the last one is my favorite, intimidation threat. This is where the professional accountant is compelled to act in a manner contrary to how the professional accountant would have acted, like threat of job losses. That is an intimidation threat, okay? Or maybe threat of, delay in promotion. That is an intimidation threat there. Or maybe blackmail. That's an intimidation threat. So let's say you are the management accountant of the organization, and there are 3 divisions within the organization, and one division is a loss-making division. And you're the management accountant, you've been called to help the company using the shutdown principle to whether the division should actually be shut down. You did the calculation and realized that yes, the avoidable cost exceeds the lost revenue, so it means the division should be shut down. Then as you are preparing to do that, the head of that division approaches you and say, I've heard about this, what's up? Then he said, don't do this. And he's like, yeah, you remember the last time when we went on the holiday trip, the things you did? I have the information available. If this department goes down, you go and tell management and this department go down, that is the end of your marriage. As a matter of fact, I will actually take that video to your husband or to your wife, the things you did on the vacation, on the work trip, because I have the evidence. It's called blackmail. It's called intimidation threat. So now you have to choose. Do you protect your marriage, protect your life, protect your dignity? Okay, it's already damaged though, but protect it so that it doesn't come into the public domain. Or you do the right thing. Listen, in all these threats, you have to stand on your grounds. Whether you lose your job, whether the blackmail succeed, whether they do agbalagba for you, menana, you are gone. We don't care. In all these circumstances, stand and ensure the right thing is done. If you lose your job, you will get another job. If they kill you, you will come back again later on. Maybe you will you'll be reincarnated. But that is the idea, that those threats are going to be present. However, the professional accountant must stand their grounds. And these are the things that we need to understand on the face level for management accounting students. So for management accounting students, either the examiner will just ask you to sometimes just directly write on some of the fundamental code of conduct, or he will present you with a scenario and ask you the ethical issue that the management accountant is facing, and then the appropriate courses of action, and that is going to be 5 marks in the exam hall for you to know about. All right? Very simple. Please, if you are writing it, just write it. I know maybe in person, if you happen to be in a situation where maybe you've done some escapade somewhere and then somebody has something on you and they come and say do the right thing, in practice, probably you bend the rules. But you're not supposed to. Yeah. If you don't want to be shamed, then don't do it in the first place. That's it. This is our profession. We protect it with our life. If we lose our job, we lose it. If we lose our marriage, it is loss. And they take 50% of your property and you are paying alimony, you understand the reason why being professional will be important. But that is the idea in respect of that. So MA people, that's where the journey ends for you. Advanced audit and assurance auditing, we take this a step further because the structure of our questions will be very important for us to know how to write out the answer if the question is a scenario-based question, right? And so if you remember, we said first, state briefly the subject matter issue that is happening. Second, what is the threat in the question? Third, what is the significance of the threat? Fourth, whether it's on the individual level or the personal level. Fifth, connect it to the fundamental code of conduct being breached. And then certainly you make recommendations. Even if you're not asked of what the accountant is supposed to do or the auditor is supposed to do, you still have to say it in respect of that. So those are the things that you must understand in the audit environment, the way we structure out our answer. But remember also during our discussion, still advanced audit and assurance people, we solved some other alternative ethics questions about the ICAG and those things. So the examiner can also go that route and ask you generically how the Institute of Chartered Accountants Ghana ensures that professional accountants carry out their work in a quality manner. Those kinds of questions we went through, please make sure you go through them again because this is a 10 marks area, done deal, waiting for you in the exam or advanced audit and assurance. And management accounting people, just the face value, code of ethics, and then the threat to the code of ethics. And that is the issue about that. So 5 marks MA, 10 marks AAA. That's the first discussion, ethical issues. Then we go to the second part of the discussion, and I am going to go advanced audit. And so in advanced audit, we mentioned that one of the key topics we're going to be seeing in the exam hall will be audit procedure. This is a 20 marks area coming in the exam hall. Okay, audit procedure, 20 marks coming in the exam hall. Whether I like it or not, it's coming. But what is the guiding principle we mentioned? We said that there are 2 ways we can approach the audit procedure issues. Note that I said in that 20 marks audit procedure area, there could be 3 subject matter issues. Okay, 3 subject matter issues. And so then the marks will be spread 774, what the heck, 776 or any other, but it will be 3 subject matter issues. Sometimes it could be 4. Now, there are 2 ways to approach the audit and assurance questions, if you remember, based on our discussion on dealing with the audit and assurance issues. The first one is to go through the accession agenda. Okay, what accessions should we test for? So, is the subject matter a transaction or an event? Is the subject matter an account balance at the reporting date? Is the subject matter a disclosure or a presentation issue? If that is the case, then it will guide you. If it is a transaction or an event, something that had happened during the year, then you want to test for occurrence. You want to test for completeness. You want to test for accuracy. You want to test for classification, right? Those are the sessions you'll be testing for. If what we are supposed to audit is on the face of the statement of financial position, meaning an asset, inventories, bank balance, cash balance, a liability, it is on the face of the statement of financial position, that is an account balance at the reporting date. And so if it is an account balance at the reporting date, then what accessions are you going to be testing for? Valuation, existence, right and obligation, then classification as well, account balances at the reporting date. So that is the first way we can approach the audit procedure question using the accession route. The second route that we can use is the IFRS route, which is, okay, the subject matter under review, does it have any accounting standard? So if the subject matter under review has an accounting standard, then what is the recognition and subsequent measurement of that item in the financial statement? Then that will guide us on how we write out our audit procedures. So for instance, if we are auditing, say there is a court case pending, and so the entity has made provisions. Okay, provisions. Okay. If there are provisions, if we are in the accession environment, this is an account balance at the reporting date. So you want to test for obligation, you want to test for existence, you want to test for the valuation, right? And you also even want to test for classification. But if you are coming from the accounting standard, this is IAS 37. So what does IAS 37 say about provisions? Or a court case, right? Technically, contingent liability or contingent asset. What are the rules governing that? What is the initial measurement? What circumstances must be met? So that will guide us in respect of the kinds of procedure that we are going to be writing out. So either you use the accession mode or the accounting standard mode, which means you are solid on your accounting standard. Either mode you go for this 20 marks area, you know the audit procedure already, the 5 vowel sounds. Analytical procedures, which is the A, this is where we are trying to compare current financial statements to previous year financial statement to the budget or even financial statements of similar entities in the industry. What are we looking for? We are looking for trends. We are looking for changes. We are looking for percentage increase or decrease. Analytical procedures. Not all subject matter items may require analytical procedures. But if we are dealing with, say, trade receivable, trade payable, asset balances, maybe provisions, those things we can undertake analytical procedures. 2 is inquiry. Inquiry is where we are carrying out procedures to seek further information about the subject matter under review. Remember, inquiry can be made internally from management and those charged with governance, and externally through external confirmations or secularization when we are auditing trade receivables or trade payable. So inquiry, we are making a lot of asking people for further information about a subject matter issue. Inspection, this is where we are reviewing documents depending on the subject matter to get information about approval, authorization, who owns an asset, checking the document. If it is a lease arrangement, you are checking the lease agreement and all of those things. That is inspection. Observation, as the name suggests, is where we are doing a walkthrough on the system to find out whether the system is working the way it is supposed to be worked. It's also about physically examining an asset in that case, or an inventory count, or an activity being done by the entity. That is observation. Then the last one is recalculation and reperformance. You want to check the accuracy, recalculation, and then reperformance. You are checking the accuracy and the arithmetic accuracy. Let me put it that way. You are checking the arithmetic accuracy of the financial statement that has been prepared. But as I told you, if you remember, we are in class, we've done this over and over again. Between inquiry and inspection, you can get that 4 points you are supposed to write there. 4, between inquiry and inspection alone. So you don't necessarily have to get goosebumps to try to write yada, yada, yada. No, just on inquiry and inspection alone, whatever the subject matter is, there are people you must talk to within the organization. Even from management, you can ask them 3 or 4 questions just on the subject matter issue, and each of those are going to be treated as audit procedures, and that is what you need to understand there when it comes to the audit procedures. Remember, in writing the audit procedures, it has to be in a simple sentence. And we've spoken about this over and over again. So that is a 20 marks area, done deal, waiting for you in the exam hall, audit procedure. Maybe 3 or 4 subject matter issues, and you decide, am I going with the accession route or the accounting standard route? Whichever option you go for, AEIOU should guide you on the procedures that you are writing out. And what you are writing out has to be a simple sentence. And please do not make generic statements. because that is not going to help anybody, and you know that already. Generic statement will not help anybody. Make sure you are giving specific, realistic procedures to ensure that you get all the marks associated with this area. So that's the 20 marks area we need to understand when it comes to audit procedure waiting for you in that case. My recommendation will be that whatever that's going to happen before the exam tomorrow, you want to make sure you watch the summary video on audit procedure again to sort of give you that courage, the guidelines that you need. Then number two, in the book, those of you with my book on advanced audit and assurance, you remember the chapter on the guiding principle on the audit procedure on the various subject matter issues. So you can also use that as a guide. And I don't want you to chew it as Baba, but just use it as a guide on various subject matter issues. And whether I like it or not, something in those subject matter issues will be in the exam hall for you to be able to work your way around. So that's a 20 marks area waiting for you in the exam hall, and what you need to understand there: advanced audit and assurance, audit procedures, and audit evidence is also just part of it, because when you're undertaking the audit procedures, you are gathering the audit evidence. Then let's switch to management accounting people. 50 marks area waiting for us in the exam hall on budgeting, right? Your favorite topic, budgeting. Oh my God. They don't like budgeting because they don't understand English. Because they don't understand English. Leave them alone. But 50 marks waiting for us in the exam hall. There are a lot of theories in budgeting. You remember we discussed this, we went through this. And then also a number of calculations that you need to be mindful of. We don't know how the examiner will be dancing in July 2025, tomorrow, as you go into the exam hall. But you know, those who know will know that the theory areas, objectives of budgeting in that particular case, right? Importance of budgeting, the budgeting process, the types of budgeting approaches. By now, I hope that you've read them: incremental budgeting, zero-based budgeting, activity-based budgeting, and even the definition for all of the types of budget. Please, that is a question the examiner can ask you. Write short note of the following, or what is the difference between a functional budget and a master budget? It's a theory the examiner can ask you. The functional budgets are the budget of all the department within the organization. Then the master budget is the bringing together of the functional budget to prepare a single budget for the entire organization. So that can be asked as well. Then the definition for each of the types of the functional budget, that can also be asked, and you have to be mindful of that. Then the calculation aspect, preparation of the flexible budget. Remember the discussions we had when we're preparing flexible budget using the high and low method. Because remember, as you go into the exam hall tomorrow, as management accounting students, these basic principles cannot evade you, which by this time I know you know already. One, cost classification. It's a very important concept. You need to understand the way cost will be classified, because if the examiner asks you to prepare a cost sheet or a cost card, you got to know how to classify the cost, because in that area, in addition to knowing about the high and low method, you are also knowing about how to deal with overhead absorption rate. So the cost classification, pretty important. If there is any advice I'll give you, maybe before you get to the exam or tomorrow morning, you can watch the summary video in the mobile application under cost classification again, if you have not. If you think you have any doubts there, to crystallize your understanding on those overhead issues, as well as the principle of high and low method. Remember, we said in the high and low method, if the total cost is not corresponding with the maximum output, and when the maximum total cost is not corresponding with the maximum output, and the minimum total cost is not corresponding with the minimum output, we use the output as the basis. So we'll just take the maximum output and minimum output to become the basis to calculate our variable cost per unit. So knowing the high and low method, accounting for overheads, these are going to be crucial in the exam hall. Second, the marginal costing principle. You cannot run away from this because you are going to apply it whether you like it or not. There is going to be about 45% of the questions maybe that may call on you to apply the marginal costing principle because you're going to be applying it in short-term decision, which is waiting for you in the exam hall. You have to apply that in variance analysis if the examiner so wish to bring a calculation on variance. And you're going to also apply it on the concept of transfer pricing if we are supposed to calculate the transfer price of the entity under performance measurement. So the marginal costing principle, very important principle that you need to understand. The assumption that variable cost per unit remains the same irrespective of the output level. You cannot run away from that. You need to remember that very well so that you know how to work yourself out. The assumption, the issue that we are dealing with, contribution, and contribution is selling price minus variable cost. Variable cost is both production variable cost and non-production variable cost. Be careful, because it is selling price minus variable cost, and the variable cost is both production variable cost and non-production variable cost. So those assumptions under marginal costing principle, you want to make sure that you are mindful of it as you go into the exam hall tomorrow. The third one is, you know already, the absorption costing principle. You need this also because it is going to come handy in budgeting. Okay? You remember there was a question we solved. Ooh, I want to remember the name of the question, but there was a question we solved where we were preparing the statement of profit or loss, but we had to come and prepare the manufacturing cost per unit under budgeting. And the way we prepared the manufacturing cost was applying what? The absorption costing principle. So that principle will apply in budgeting. It'll come in variance analysis as well. Because remember, the environment we are in determines the way we calculate the overhead variances and then the sales volume variance. In the marginal costing environment, we use standard contribution. In the absorption costing environment, we use standard profit. Then certainly that is also going to chase you down into the issue in respect of performance measurement. To be specific, dealing with issues about ROI and RI, getting the total profit of the entity. So these are fundamental principles. Now, the beauty is that there are theories there. So the examiner can ask you, what is the difference between marginal costing and absorption costing? Why is marginal costing profit different from absorption costing profit? Okay. What are the limitations of marginal costing over absorption costing? Okay. What are the advantages of absorption costing to... Those are theory issues the examiner can ask you. And the examiner is just getting goosebumps and want to take your brain on certain things. So those are issues that you need to understand. That. Then remember, the reason why the absorption costing is important is because you may have a 10 marks question on preparation of a job cost card for a company. 10 marks. So prepare a job cost card, meaning the total cost and the profit that is you charge. And you're going to be applying the absorption costing principle in that case. Or we will have preparation of profit statement, okay, under the marginal costing principle or absorption costing principle. Remember, in that case, then in the absorption costing principle, we have to do over or under absorption of what? Overhead. And the way we do that is that you compare the budgeted overhead for the period to the overhead that you have absorbed based on your calculation. So that if what you have done based on your calculation is more than the budget, then it means overhead has been over-absorbed. If we're in the profit statement, if overhead is over-absorbed, you have to go and add it back to the gross profit. But if your calculation is less than the fixed cost for the period, then overhead has been under-absorbed. So the difference would have to be subtracted from the gross profit. So be mindful of all of those concepts because they are primary to your ability to be able to go into the exam hall and pass the examination. And the last fundamental principle will be activity-based costing. This is crucial because it can come on its own for us to, determine a cost cut, preparation, or applicable even under transfer pricing. Yeah, under performance measurement, when we are calculating the transfer price, the examiner can ask us to apply the activity-based costing principle instead of the traditional absorption costing principle or the marginal costing principle. So activity-based costing, you want to make sure you understand them. The beauty of these things is that you must understand them. Whether you get a dedicated question on them or not, they will be called on in major topics. As you can see there, short-term decisions, variance analysis, transfer pricing, budgeting. So the major topics, you got to be applying these. If you are lucky and the examiner brings dedicated question on them, and you are going to also apply them in the major topics, guess what? That is lottery for you, and you got to kneel down and praise the examiner because he has done well for you. So those are the basic concepts that you have to understand when it comes to the management accounting examination. So if I come back under the budgeting, those terminologies that we went through, please make sure you go through them. Basic budget, current budget, fixed budget, flexible budget, all of that very important. But I want to just go straight up into the various functional budgets. The goal here is to know how these budgets are prepared. So you can take a screenshot of this or whatever the heck, but these are the things you must understand. So sales budget is telling us the expected sales volume and revenue. Production budget is the units that must be produced to meet the sales. But when we are preparing the production budget, we must take into consideration the effective output if there is any. And if defective output has to be built into the system, it increases how much we need to produce. So for instance, just an example, if we are told that maybe 9% of output is defective, okay? Then in that case, when we do our calculation to get a sales unit multiplied by the product, we bring the sales unit, you bring your opening stock, will be less. You add the closing stock, okay? The final figure is the production unit, okay? Now, if 9% will be wasted, then what it means is that the defective output is going to be here. So this is 100. If it is 9, this is 81. So if I need a defective, it's going to be 9 over 81 times this figure I get here when I bring the sales unit, less opening stock and add closing stock. So that is how we build effective output into the system. That is, if we have any in the given question. Material usage budget, how many kilograms, liters, or grams of material we need. Remember, in the material usage budget, you must build into the system normal loss. It works the same way, just like how this principle of defective output works. If there is normal loss and we have to build it into the system, that is how we build it into the system. Material purchases budget, how many kilograms of materials should we buy? This is prepared by the procurement department. So we're going to be bringing the material usage for the production unit, less any opening stock, add closing stock, then boom, we get a material purchases budget in kilograms. We multiply that by the price per kilogram, and then we get it in currency format. Labor hour budget, pretty important there. The labor hours we need for the production unit. The labor hours we need for the production unit. And so when we are preparing the labor hour budget, two things may happen. Either there will be ideal time, which means we will need more hours than required, or there will be labor efficiency, which means we will need less time than required in that case. Then labor cost budget, how much we pay labor, overhead budget, then the master budget could come on. As I said, under budgeting, I don't know what the heck the examiner is going to do. Last semester, he went theory. This semester, we don't know. Maybe he would bring some calculation or theory. Whatever be the case, you'll be in a better position to go into the exam or and pass the examination because we have done whatever the heck it is we are supposed to do as you go into the exam. So please be mindful of the principles underlining each of the functional budget preparation and even the cash budget preparation. Probably you will go there and That is what the examiner has brought. But remember reading the question and making the various conclusions that has to be made based on the context of the question in that particular case. All right, so those are the things you must understand under budgeting, that 15 marks area. So the calculation part, either we are preparing a functional budget, cash budget, or something like that. If the examiner wants to go theory, then you know the kinds of theories that he's going to be bringing as well. But that is our 15 marks area, budgeting. That is what you must understand. Yes, Gladys, your hand is up.
Find out about the advantages or the objectives of budgeting as the purpose, because in the book I can only see purpose of budgeting.
Yeah, you said what?
The importance and the objectives of budgeting is the same as the purpose of budgeting.
Yeah, they are used interchangeably. So if you ask, you can write the same thing. Okay. So let me go back to auditing. Auditing, 20 marks waiting for us on this guy, my favorite guy, audit reporting. Oh, don't you just love audit reporting? My favorite guy is going to be in the exam hall for you. Let me see if my team put this in my slide for me. Yep, audit reporting. And so when it comes to the audit reporting, 20 marks area, you know that 15 or 20, okay, depending on how excited the examiner is. Couple of things can come up here we need to be mindful of. Subsequent events, ISA 560, subsequent event, going concern, okay, issues, and then the audit report itself, the guiding principles in that case. So subsequent events, what should the auditor do? We've gone through this, discussed this, and so we mentioned that when it comes to the subsequent event, the auditor must carry out what? Procedures, inquire from management, the process they have put in place to identify subsequent events and account for subsequent events. We ask management whether there has been some subsequent events and are they adjusting or non-adjusting, and have they done the right thing that they are supposed to do. Sometimes management may fail to adjust the financial statement, although the event is an adjusting event. Under that circumstance, what should the auditor do? The auditor can inquire from management the reason for their refusal to adjust the financial statement. Number two, the auditor can assess the materiality of the subject matter in question, okay, and the pervasiveness of the subject matter. Because if it is material and pervasive, then three, the auditor must then inform management that their refusal to make the adjustment may affect the type of opinion to be issued in the financial statement. Remember, we said we are not going to turn on management like, yeah, we hide behind something. No, management will have to know why we have to issue a certain report so that they would have to do the right thing in that case. Going concern issues, there are indicators of going concern. For instance, the company just lost some key management personnel. The company has lost a significant customer or a supplier who supplies the goods. They've lost that supplier. All those things could be, or shortage of key raw materials. All those things could be indicators of going concern. But if you remember, we said that if the indicator is there, management will be putting in place measures to mitigate those things. Now, the auditor must assess the reliability and yes, reasonableness of the mitigating factors put in place. If we conclude and we are convinced that, oh, the mitigating factors for the going concern indicators, uncertainty about going concern indicators are appropriate, then there is no issue. But where management's conclusion doesn't really meet our expectation, then we may consider to include in the auditor's report uncertainty regarding or relating to going concern in our auditor's report. As you remember, we use Carl Bank's audited financial statement and Deloitte, their auditors included in the audit report uncertainty relating to going concern, because Deloitte was not sure whether Carl Bank can continue as a going concern within the next 12 months due to the fact that they are capital adequacy ratio was around negative 7.2, and then there were other indicators as well. So, and then the explanation that management gave to Deloitte, I thought was not to their satisfaction. That is why they included that paragraph in the report. But if management assertion is okay with us, then it is no longer an issue. Then we come to the audit report itself. Remember, I said we won't prepare an audit report. However, the examiner can set us questions depending on what he wants to do. Number one, either he will bring us a draft auditor's report for us to critically analyze it. Okay, critically analyze it. And so the pro forma of the auditor's report, please make sure you review it before you jump into the exam hall tomorrow, if I can say that. The pro forma, the title, right? It is, or the address, it is addressed to the shareholders of the entity. We bring the opinion paragraph. In the opinion paragraph, we want to see the opinion, we want to see the financial statement audited, we want to see the reference to regulatory framework and IFRS, the financial reporting framework the entity is using. Then we come to the basis of opinion paragraph. In the basis of opinion paragraph, we want to see reference to the IFRSs explicitly. Did I say IFRS? Reference to the ISBA code of conduct explicitly stated there in the basis of opinion paragraph, and how the auditor reached the conclusion under that. So please make sure you remember the pro forma. Key audit matters will come. This is where the auditor brings to the attention of the users of the auditor's report, shareholders to be specific, significant matters that arose during the audit and how the auditor dealt with them. So the pro forma of the audit report is crucial, because if the question is going to be critically appraise the audit report, then that is how we are going to be looking at it to ensure that whatever that is included in whichever paragraph in the draft is actually what is supposed to be there. Or if some paragraphs have been interchanged, then you have to do and write it out. Now, you won't be required to redraft it. You are just critically analyzing it and then saying what you have to say in accordance with the audit report. Then we come to the opinions that we're going to be issuing. You know this already, 4 types of opinion. Unmodified opinion, it means BBIFI, the financial statement taken as a whole, represents the true and fair view of the entity. Qualified opinion means everything is okay with the exception of 1 or 2 things, all right? Adverse opinion means the financial statement is not good. It's smelling. It's not good at all. So, and then the disclaimer opinion. This is where the auditor says, I cannot express an opinion on the financial statement. Why? Because the accountant or the auditor has not been able to gather sufficient appropriate audit evidence. So where the accountant is unable to gather, the auditor is unable to gather sufficient appropriate audit evidence, then disclaimer opinion will come. Now, the examiner can hit us with an interesting question as to why the auditor may not be able to gather sufficient appropriate audit evidence. And in those scenarios, what should the auditor do? Now, that's a question the examiner can throw at you in that case. But remember ISA 701 and ISA 700 issues about modification of audit reports, right? We modify the audit report. In other words, between the other 3, Which one will be appropriate depends on three factors. If you remember, materiality of the subject matter, the pervasiveness of the subject matter. Pervasiveness means whether the subject matter affects the entire financial statement or just a portion of the financial statement. That is pervasiveness. Then the ability of the auditor to gather sufficient appropriate audit evidence. And so we mentioned that if the subject matter is material but not pervasive, it means it doesn't affect the whole financial statement, then the auditor can issue an except for or a qualified opinion. If the subject matter is material and pervasive, it means the auditor will issue an adverse opinion. If the subject matter is material, pervasive, and the auditor is unable to gather sufficient appropriate audit evidence, then certainly the auditor will issue a disclaimer opinion. So those are the things that we need to understand when it comes to the audit report. But remember, there are other paragraphs that could be included also in the audit report, and that is the emphasis of matter paragraph and other matters paragraph. We mentioned that the inclusion of either paragraph in the audit report does not modify the audit opinion. What does that mean? It means we can issue a modified audit report or an unmodified audit report, and these paragraphs may still be there. That does not modify our opinion. Emphasis of matter, highlighting important uncertainty disclosed in the financial statement. So the things have been disclosed already in the financial statement, but we still want to highlight it so shareholders will understand what is going on. Other matter paragraph, things that in the auditor's judgment, users must understand and know about, which may not directly be stated in the financial statement. So those are the things that we must understand when we talk about the audit report. And remember the last one, we said we can have procedure here. Okay, because you remember what I started with, the procedure the auditor should undertake in respect of subsequent events. So you can even have audit procedures under the audit reporting segment, and we've solved questions. You've seen the way the structure is supposed to be done. So that is a 15 marks or 20 marks area, done deal, waiting for us in the exam hall that we need to be mindful of as we go into the exam hall tomorrow. And the thematic areas are the things that I just highlighted that you need to be mindful of. Then I come back to management accounting, and we go to another 15 marks area, and that is your second favorite topic, variance analysis. Right? Variance analysis. Pretty simple concept here. Yeah, there are theories we need to be mindful of and the calculations that we need to be mindful of as well. Let's see if I have that inbuilt in my system. Do I have that? Give me a sec. Yep, here we go. So have it inbuilt in my system. The theory issues. Please, when you are reading variance, types of standards. It's a 5-mark question the examiner can ask you. What is current standard? Attainable standard? Ideal standard? Basic standard? What are the objectives of standard costing? What are the limitations of standard costing? And the behavioral aspect, which is the reasons for variances. As I told you, there are various ways the examiner can bring the question. Either the examiner will say, hey, listen, the entity has the variance report already. Can you analyze it? So you're not doing any calculation. You're just looking at it, analyzing, and stating why a certain variance is adverse or favorable, and you make recommendations. That's one styling of question. Or the examiner will let you go the basic variance, or he will let you go mix and yield variance, or the entity is selling more than one product, you are supposed to go into that, or the reversal approach, which we saw during our revision session, all pending on the basic principles that we spoke about. And so this is the final guideline that I want you to really take away in that case. That when it comes to the variances, it's about concept, not formulas. It's about concept, not formulas. So if we are dealing with the direct material price variance, this is based on the actual material bought or used. So for the actual material bought or used, how much should we have paid based on our standard? How much did we pay? That's the idea there, price variance. Material usage variance is based on the actual units produced, taking into consideration the actual material used. And so the actual unit produced, how many kilograms of material should we have used? How many kilograms of material did we use? So those are the concepts that you must work with as you go into the exam hall for these variance calculation issues there. Then you know the usage variance can be split between the mix and yield variance. Remember again, in the mix variance, you are going to be bringing your standard quantity in actual mix, actual quantity in actual mix. And the way we said that, you just bring the actual materials that have been used here. You get your totals up. You bring that total and the standard quantity in standard mix. Then you go to the standard cost card and use the ratio of the materials used to come and share this figure between the two materials, if it is P and Q, under this. Then in that case, this is your should, this is your did. So that is the idea there. Standard quantity in actual mix is your should, and then actual quantity in actual mix is your did. So you get it, then you get your difference coming up. So if your should is more than your did, that is a favorable variance. But if your did is more than your should, that is an adverse variance. So you got to be mindful there, mix and yield, mix variance. That's how we work it out. Then certainly you bring the standard material cost per kilogram, then you get your variance in the final column. Under the yield variance also, we mentioned we can do in total or for each of the materials. If we are doing in total, we just bring the actual material that has been used for all the materials together. How many units of output should we have produced? How many units of output did we actually produce? If the should is greater than the did, then that is adverse. If the should is less than the did, that is favorable. So you got to be careful there under the yield variance working in the total environment. But here is the trick. Remember we said that if you're in the yield for the total, because you are now getting outputs, you have to use direct material cost per unit. And so if the entity is using material X, Y, and Z, then you'll bring 5 kilograms per, or 5 kilograms at, say, $2, 3 kilograms at, say, $6, 9 kilograms at, say, $1. So this is going to be 6, this is going to be 18, this is going to be 9, and that is going to give you 15, 33, and then 34. Look at me, 15, 25, 33. And that becomes the direct material cost per unit, which is what you will use to multiply the difference that you get there in that case. That is the yield in total. But if you want to use the yield for each of them also, you remember we spoke about the concept, your actual quantity in standard mix will come, then you bring your should have. So in that case, you have standard quantity, actual mix, standard mix in standard quantity, and then you get your variance. Now, this is your original should have, and this will become your did if we are doing the yield variance for each product. So these are the concepts, these are the principles that you have to work with as you go into the exam hall. Because, I don't know, if the examiner brings multiple material environment, then you're going to be working with mix and yield variance, and you got to be mindful of how you work yourself around. But that is the concept about that. Labor Labor rate variance. It simply means for the actual hours we paid, how much should we have paid? How much should it have cost us? How much did it cost us? That's the idea there. Then efficiency variance. This is based on the actual units produced, taking into consideration the actual hours worked. So you got to be careful here. So the actual units produced, how many hours should we have used? How many hours did we use? And then the difference will be multiplied by the standard labor rate per hour. Then if there's a difference between the hours paid and the hours worked, then we have a third variance called the idle time variance. Remember, the idle time variance is always adverse because you are looking at the difference between hours we have paid and hours people worked. So that is a concept also under the direct labor cost variance. Now, you have to understand that even when it comes to the direct labor rate variance, in that case, it could be divided into still different grade of labor, just like the way the mix and yield variance under the material is calculated, in that case, in some cases. Then we come to the overhead variances. Here, it depends on the environment that we are in. And I think in our last session, we spoke about the way you are supposed to walk around in respect of the overhead variances. If you are dealing with fixed overhead expenditure variance, that's the simplest one. Just bring your budgeted overheads and your actual overheads. That's all. Then fixed overhead efficiency variance. We said go to the labor efficiency variance, pick the difference, and come and multiply it by the standard fixed overhead absorption rate per hour. Then you are good in that particular case. So the overhead variance, note that you can have a question just on the overhead variances, 10 marks. And you are just calculating overhead variances, 10 marks. You can also have a question and you are calculating only the sales variances, 10 marks. Because in that case, you will calculate all the 4 sales variances. Sales price variance, sales volume variance, then the sales volume variance split into sales mix and sales quantity variance. So the examiner can just bring just a portion of the variances and ask you questions about them, other than bringing them as a whole in the exam hall. And that's what I was talking about a moment ago, that when it comes to the sales variances, the volume variance, what we used, depend on the environment we are in. If the question is quiet, the assumption is that they are in the absorption costing environment, so you use standard profit. But in the marginal costing environment, we are going to be using standard contribution. Sometimes we may have to calculate these on our own using the standard cost card provided in the question to do or answer the question in that case. So that is the idea here. Now, as I mentioned, the sales mix variance calculation is the same as the material concept. So you're going to bring your standard quantity, actual mix, actual sales in actual mix. So maybe the company is selling, 3 products. What should we sell? You know already. We should sell some condoms. We should sell some sanitary pads. And we should sell some baby diapers. As people will be giving birth, we have to be there to help them take care of their children through baby diaper. So baby diapers. So what we do is that you bring the actual sales figures here, right? You just bring the actual sales figures here, get your total, then you come here, get your total. So you move that total to the standard quantity in actual mix. Then you go back to the standard cost card. How many units did the entity budget to sell respectively for each of the products? We get a ratio of that to come and share this, and then that will be it. Now, this is in a revenue environment. Still, this guy is should, and this guy is did. But here you are in a sales environment. And so if the did is more than the should, it's favorable. Unlike material, is the reverse here. But the idea is the same. Then you get your difference here, as you know already. Then either you bring standard profit, absorption costing environment, or standard contribution, marginal costing environment, then you get your variance. So that is the sales mix variance calculation. But sales quantity variance, that one we said, what are you doing? Bring your standard quantity, actual mix, and then you bring your standard quantity in standard mix. And as I told you earlier, here it is just the budgeted sales you are bringing. Okay, you are just bringing the budgeted sales. So in the sales environment, this is your budgeted sales. Unlike the material where the yield variance, it is the should. And you will multiply the actual units by the standard to get the standard quantity in standard mix in standard quantity. Here, it is just the budgeted sales. So when we get to the sales quantity variance, that one still the budget is going to become should, and this guy will become did, and then you get your difference coming up there in that case. So these are the principles underlining what is happening here. The entity is selling more than one product, then we may be required to go down this rabbit hole. Again, we can have dedicated question on the overhead variances, just 10 marks, overhead per, or 10 marks, you are doing sales per, or 10 marks, you are doing material mix and yield variance coming up, or the reconciliation statement preparation. So please make sure you review that. The pro forma for the reconciliation preparation, make sure you review that because that is very important. That will be featuring in the exam. Sorry, may be featuring, got to be careful with my words, may be featuring in the exam hall that you have to be mindful of. So in the absorption costing environment, there is a way the pro forma is prepared. In the marginal costing environment, there is a way it is prepared. So make sure you review that before you get to the exam hall, then certainly the reversal approach. So these are the things we must understand when we talk about variance analysis. Again, it is not a formula game, it is a concept game. Once you get a concept, you should be in a better position to be able to answer whatever question the examiner is going to be throwing at you. But if you are not good, you don't remember your concept well, then certainly you are going to be having problems in the exam hall. But these are the principles that you need to know about in respect of this. Okay, so that's variances. The last part is the behavioral aspect, which I told you about earlier. Why is the material price variance adverse? Why is it favorable? So those are behavioral aspects. So the reasons behind that. And if you remember, I think we gave some generic points that it could be because of price changes. It could be because of efficiency and inefficiency in the production system. It could be because of poor planning or standard setting. It could be unexpected changes in the market or the input quality. So these are generic points that we spoke about or brought about in the discussion, but based on whatever variance we are looking at, we may have to apply specific or write out specific answers in that case. So 15 marks, variance analysis, there you go. We done. Variance analysis. Give me a sec, let's see, I want to see if I can pull a certain slide up here. Okay. So that's it. Variance analysis, au revoir mon ami, the principles and the theories. Let's go to audit people and then bring something to them. So auditing, we've looked at procedures, 20 marks. Reporting, 15 of 20. We've looked at ethics as well already. The next one in the mix will be corporate governance. 10 marks question waiting for you in the exam or on corporate governance. They say corporate. So corporate governance. So in the exam hall, we're going to have a 10 marks question, advanced audit and assurance on corporate governance that you got to be mindful of. Now, if you remember, we've discussed this, talked about a couple of things there, but thematically, you want to remember the governance codes, right? The corporate governance codes. You know, you want to remember that very well. Sorry, give me a sec. Let me see if I have that inbuilt in my slides that I wanted to pull up here. Do we have that separately? Yeah, I think I have something here. So the governance codes, pretty important in that case, okay? So whichever code we are dealing with, you have to remember them. Governance codes as per the Companies Act or the Security and Exchange Commission's governance code or, UK combined code. The most important thing here is the individual chapters, whatever code that we are referring to. So please be mindful, because if you remember, I told you the examiner can just pick a segment, maybe about director's remuneration or about board structure. Sorry. Or about board structure and ask you a question about it. So you got to be mindful of the individual segment there. Then the role of committees of the board, pretty important in that case. Or the examiner can bring a scenario for us. And in the scenario, we are supposed to look at the various governance issues in the question in that particular case. So, for instance, if we are looking at that theory area, the way we write out our answers. And so it could be presented in this format where we bring the governance weaknesses on one side, and then we bring in the recommendations on the right side. So please, what I would recommend on this 10 marks area is, before you get into the exam hall tomorrow, make sure you watch again, if you have not already, under the summary videos, the question that was discussed there under the corporate governance, because that question, I think, is different from what we did in class. So please, you can watch that video. I don't know, it's just 20 minutes or so, 18-minute video. So you can watch that video, because that video walks through the entire principles under corporate governance. Most importantly, how you are supposed to write out the answers. Because we are going to be adhering to the governance principle, the way the board structure is supposed to be, that the role of the CEO and the board chairman should not be held by one person. What are the role of the board chairman? What is the role of the CEO? Who appoints directors of the board? It is not a CEO who appoints the directors on the board. Instead, we need to have a nominating committee. Okay, there has to be audit committee who will be responsible for assisting and designing internal controls. There must be risk management committee to identify, assess, and also recommend mitigating factors for all the risks that the entity might be exposed to. The role of the independent non-executive directors on the board, and the limitations that they have being on the board of the company. So those issues are all areas, 10 marks, that the examiner is going to be bringing in the exam hall that you need to be mindful of when it comes to the corporate governance. And so the role of the board chairman, supervising the board, ensuring that each board member has the necessary information before the meeting, ensuring that meetings are carried out regularly. If you remember from the Companies Act, at least twice a year, okay, every 6 months, so at least twice a year. But some companies will do every quarter, meaning 4 times in a year. But as per the Companies Act, at least twice a year for the board to be meeting, and it is the board chairman's responsibility to ensure that that is done. Remember, we said there must be diversity on the board, diversity in skills, expertise, and the good old gender, right? Gender balance on the board, because, got to empower the women so that you give them big position because they also matter in the society in that particular case. So that is also going to be there. So the board structure, because remember, board structure is what the first principle under each of the governance code, whether we are referring to the Companies Act or the Security and Exchange Commission. So the board structure is key. We must know about that. Then the director's remuneration. Remember, in designing director's remuneration, it is based on three things: competitiveness, performance-oriented, and stock options. Competitiveness, performance-oriented, and stock options. And so that is the statement that the board must be mindful of when setting remuneration of the top people within the organization. It is not about your qualification alone. It should be competitive, it should be performance-oriented, and some stock options should be there. Certainly, regular meetings with the shareholders is a key corporate governance principle. Preparation and presentation of financial statements and having those financial statements audited is one of the corporate governance principle. Then the issue about internal controls, okay? Because the entity must have efficient and effective internal controls, because that is what is going to be driving the financial statement that is going to be prepared at the end of the day, whether the financial statement will be reliable or not. So all those discussions embedded in that governance area for 10 marks that you need to be mindful of. So again, bringing that up, under the ethics, we got 10. Under the audit procedure, we got 20. Under audit reporting, we got 20 there. Then governance, we got 10 there. Then let me add the types of audit in the public sector. That is 10 marks coming in there. Now, if you remember, we said there are 3 types of auditing in the public sector. Give me a sec. Let me see if I can pull up a slide on that quickly. Types of audit in the public sector, 3 types. Okay, so we spoke about performance audit. This is undertaken after the entity has performed something, has executed a contract. It could be a road that has been constructed, a hospital that has been constructed. We undertake a performance audit. What are we looking for? Are we achieving value for money, economy, efficiency, effectiveness? But also, how was the contract awarded? Was it awarded in accordance with the Public Procurement Act and permission or clearance from the Public Procurement Authority? That's what we are trying to do on performance audit. Then compliance audit. Here we are looking at the activities of the whole organization. Is the entity adhering to the legal framework that established them? Are they adhering to their own internal controls? And are they carrying out their activities in accordance with directives issued by regulatory authorities? That is the compliance audit. And then certainly financial audit, which is a mixture of the two, the traditional audit where we are reviewing the financial statement. So whilst doing the financial audit, we are going to be looking at some performance issues and some compliance issues there in that case. Not forgetting the role of INTOSI. Remember we discussed the role of INTOSI and then the issues in respect of attestation engagement and other non-attestation engagement, and the role of INTOSI, promoting accountability and transparency and providing independent and objective assurance. So those are going to be the types of audit issue, 10 marks area that will be coming there. We don't know. Maybe the examiner will say write notes on the 3, or as I said, maybe Konongo Municipal Assembly, just an example, okay? Konongo Municipal Assembly has recently constructed a market for the city, and you are being appointed as the head of a team to go there and carry out a performance audit. What procedures will you undertake on the market that has been constructed? Remember, we answered a question like that in class, right? I gave it to you as an assignment, and I think we discussed it together later on. So that is a styling of question that the examiner can bring there. So you must know that, okay, they have constructed a market and I'm going to carry out an audit. So that is performance audit. So what am I looking for? Economy. How much did they pay for it? Is it too much? How do I verify that? Efficiency. We are looking at the relationship between the input and the output. What we spent, is that what we are supposed to get? Then effectiveness. Is the market serving its intended purpose? Because if we have constructed market and spent $10 million to construct a market and people are still selling on bridges by road, then the market should be closed, like we have in this part of the world. I don't know why, right? The market is there, but people have turned footbridges, streets, and the main road as a market point. If you say it, they say, oh, it's a single mother. It doesn't have any child. Let's allow the person. No, that is not how a nation is built. We order people to stay within the market and direct buyers to go into the market and buy. You don't allow people to sell on footbridges, on road. Then you're like, oh, single mothers, poor people, let's allow them. Otherwise, they won't vote. No, that is not how we build a country. And that is effectiveness. That is why there are a lot of markets, footbridges in this country. They are serving no purpose. No wonder a government can decide not to build them because they know if they construct them, it will turn to marketplace. Human beings will not even use them. They will still be jumping like crocodile and frogs in the middle of the road, speeding vehicle. And woe betide you if you are driving and you speed and you don't know, you nearly hit them. They will turn and insult you on top of this. When they are supposed to be using the footbridge. That's the concept of effectiveness. Is the project serving its intended purpose? So it depends. That 10 marks area, the types of procedures, the role of INTOSI, and those things that we need to understand. So audit and assurance, that is what we need to understand. 70% already on your side. Right? Then let me come back to MA people. Where were we? Hey, you are going too much. We were on variance analysis, right? So from variance analysis, let's jump to another 15 marks area, which is the public sector issues. The public sector issues. Give me a second. Let's see if this is in my slide here. Yeah, I think it is. Yeah. The role of the management accountant in the public sector. There's 15 marks waiting for us in the exam hall. Done deal. Management accounting that we need to know about. As I said last semester, this was there. I mean, the 3 E's. Okay. Does it mean it won't come this semester? That's not what I'm saying. I'm just giving you something. That's all in that case. But, the management accountant performs various roles in the public sector, like preparing budget, project appraisal, and then assessing value for money on all projects at the end of the day. And so if you remember, I asked you to watch a video about how cash budget is prepared generally in the public sector. And then project appraisal is the thematic area. In the November 2024, the examiner brought the cost benefit analysis. Then in March 2025, the examiner brought the benefit cost ratio. In that case, in March, we don't know what the heck he's going to do, or maybe we just go theory under this area, which I will love because, that's very easy for you in that case. But then the methods that we need to understand. If we are going for NPV, we spoke about some core principles that you need to be mindful of. And so here we said there will be no taxes like we consider in the private sector, right? However, we are going to be discounting as we know already. Most importantly, if there is any working capital issue, remember, it is the increase in the working capital that is considered. Then any working capital outflow comes as an inflow at the end of the project. And so just permit me to illustrate that to you for the last time. So let's say we have sales 1, 2, 3, 4, and sales respectively 10,000, 15,000, 25,000, and then 40,000. So we are told that working capital is 10% of the sales. It means this is 1,000, this is 1,005, this is 2,005, and this is going to be 4,000. But this is not the working capital we will bring in the investment appraisal schedule. We are interested in the change in the working capital. So the incremental working capital. Now, if we are told that the working capital is going to be required at the beginning of the year, what it means then is that we would have to reschedule ourselves so year 0 will come. So what is required in year 1 would have to be made available in year 0. At the beginning of the year, it means we have to make it available at the end of the previous year. If it is the same year, no problem. Now, in year 2, it is the increase we will bring. So this place is going to be 500, still an outflow. Here, the increase we will bring, that's 1,000, still an outflow. Here, the increase we will bring, and that's going to be 1,500, still an outflow in that particular case. And so when you finish and add it up, you should get an inflow of 4,000 coming at the end of the period there, because 1,500, 1,000, 1,005 gives you 4,000. That is a concept about working capital in the NPV environment or the IRR environment. Where this is applicable is, as I think Reginald asked at the beginning of the class, maybe the municipal assembly is undertaking a project, and the project is going to be a profitable one. They expect to get some money from the project, and so they will be using NPV. If working capital is required, then you have to know the context of the question and know the way it has to be built. Note, if it is just one period, they say, oh, working capital will be required at the start of year 2. Okay, if at the start of year 2, then that working capital will come in year 1 as an outflow. But then at the end of the project in year 4, it will come there as what? A positive figure. Be careful, because sometimes we will be told that the project has a life of 4, but the asset, the residual value of the asset will be maybe 10,000 in the 6th year, which means our NPV schedule is going to be 6 years. But year 1, year 2, year 3, year 4 is where our regular things will be done, working capital, sales, cost. Nothing will be in year 5, but the proceeds will be entered in year 6. So be careful about the context of the question and the way you play out. The reason I brought that up is that if they say, oh, residual value is in the 6th year, but the project ends at year 4, and we need working capital at the start of year 2, yes, that working capital will come at the year 1, but it will come at the end of the project, which is year 4, not the year 6. Principle. That is very important in that case. So you want to be mindful of the way the language will be stated, the skirmishes and nuances that the examiner may throw at you, but you're going to be good in that case. Then we said that we solved the question about that. But then ARR is there, the accounting rate of return. IRR is there. I mean, the payback period is also there. If we are dealing with mutually exclusive projects, meaning the municipal assembly has more than one project, they want to select one of them, then they may want to use payback period. So the one that pays us the earliest will become the project that we go for. Remember the merits and demerits of these methods. Please don't forget them, because it's something the examiner can throw at you in the theory part. As I was saying, you may go to the exam hall and there is no calculation on the role of management accountants in the public sector, and it will just be theory questions, right? So please make sure you read the things that we discuss well, and as I'm emphasizing with you here as well. But in the public sector, really, there are certain methods that are exclusive, which is the cost benefit analysis, we just look at the difference between the cost of the project and the benefits we're going to be getting from the project. The rule is simple. If the benefits outweigh the cost, accept the project. If the benefit is less than the cost, reject the project, don't undertake the project. That is all. And it is useful where social and economic returns are prioritized. But we said we can also use what we call the benefit cost ratio. The benefit cost ratio, which is where we bring the present value of the benefit and the present value of the cost. So that is a fraction. So if our answer is greater than 1, we accept the project. Less than 1, we ignore or reject the project. As I mentioned, in November 2024, cost benefit analysis was there. In March 2025, the benefit cost ratio was there as well. We don't know what the heck is going to do in July, but you must know all of the methods because the examiner can bring each of them if he still wants to bring calculation. If not, then the theories under the methods may be asked by the examiner, and certainly the concept of externalities that you must be mindful of. Cost effectiveness analysis, we say that this is useful when, the objectives are fixed, but, the methods are different. So the example we said here was that we will use the least cost, okay, for achieving the objective in that case. So we gave an example of solving the flooding issue in Accra, and we want to either dredge all the drains or enforce policy so people will not build by heart across the country without any control, or demolish the building. And so per the examples, cost effectiveness analysis, we go for the demolition exercise. Remember we said this is a little bit, subjective because it relies on subjective judgment, okay? The outcome can be hard to quantify and may result in suboptimal decisions. Then certainly we spoke about the cost outcome analysis where we are talking about we have certain programs, certain policies we want to undertake. What is the cost we are incurring? What is the outcome of the policy or program of government? We will select the policy, the program that has the highest outcome on the standard of living of the citizens at the end of the day. So we gave an example that, we have 24-hour economy, free SHS, health interventions. Government has to choose or wants to choose. Which one should we go for? We look at which one is going to be having significant outcome of this on the standard of living of the citizens. Because for the most part, if the economy is working, people are working well, and the employment rate is lower, government doesn't have to step in to provide health benefits to anyone. Why? Because people can work and they can go take care of themselves, and government doesn't have to provide any significant support on that. So in that case, the government will say, hey, I want to prioritize 24-hour economy as a policy or as a program in that regard. And then the last thing, certainly, is the concept of externalities, the effect or benefits that arises as a result of undertaking a project. And so these are the 15 marks area, the role of the management accountant in the public sector that we need to be mindful of. So either we are going to be going theory, then the methods, and then externalities, and those things. So if the examiner wants to go theory, that is the land he's going to visit you with. If he wants to go calculation, then again, the method may come, or the video I asked you to watch, prepare a budget for the entity in the public sector. So that is the idea also about the role of the management accountant in the public sector. So we've considered ethics, a 5 marks area that the examiner could throw at us. Budgeting, 15 marks area there. Variance analysis, 15 marks area. Management accountant role, 15 marks area. Highlighting the principles underlining each of these, very important. Then certainly those basic concepts and basic principles that we talked about 10 marks area that we are going to be getting some things coming in from there. In that case, that we have to be mindful of. So those are the things that we have covered so far. highlighting the key principles on them. Finally, is going to be the short-term decisions. Okay, short-term decisions. In management accounting, so I'm still in management accounting. Now, it's likely you have two different short-term decision issues coming in, one theory, one calculation coming in the exam, or it depends on how excited the examiner is though. But we've spoken about the various things there that we are applying the marginal costing principle. Remember, if it is a relevant costing, one-time order that the entity has received, or a special order that the entity has received, then we are going to be applying the relevant costing principle. And so we must distinguish between relevant cost and non-relevant cost. So relevant cost and then non-relevant cost. And here, it is the English, okay? If your English is not good, you know this already because, I mean, if you can't comprehend the language you are reading, you're going to get Zokpo from here. So you got to be mindful of the mind map we did. So when it comes to material, is it in stock? No. If the material is not in stock, then we buy it in. So the purchases price becomes the relevant cost. If it is in stock, then we ask another question. Is it in constant use? Yes. If it is in constant use, or it's a regular stock, then when we use it for this order, we have to replace it. If it is not in constant use, we ask ourselves the last question. Does it have an alternative use, or can it be used for something else? If it has an alternative use, or it can be sold, then the relevant cost will be the opportunity cost. If it has no alternative use, then the relevant cost will be 0. It means we will use the material for the project and charge nothing for it. So the relevant cost will be 0. However, there is a catch there. If the material has no alternative use, however, the entity must dispose it off at a cost, then using it for this order means the entity will no longer incur that disposable cost. In that case, the disposable cost that the entity will no longer incur by virtue of this order is a cost savings for this order. So when we are determining the cost of this order, that cost we will no longer incur will be deducted in determining the total cost for this special order. Why? Because the customer just saved us from paying that money. So we have to deduct it from the total cost we would have charged the customer. Remember I said you're going to fight a little bit with common sense and the relevant costing. Because somebody will say, we've bought an inventory and somebody has come for us to work. Why shouldn't we charge the person for the inventory we've bought? No. If there is no alternative use for the inventory, you can't sell it, you can't do anything, and you'll be wasting it, you don't charge the person anything. It doesn't look common on the face value, but that is the principle under marginal costing. So if your English is not good, you cannot comprehend the language, then you're going to be walking away from Zokbo in that case. Second, we spoke about shutdown decision, as you remember already, right? Here we are looking at the foregone revenue, okay? How much money are we going to lose if we shut down this division as compared to the avoidable cost? It means the cost savings on this project. Remember, the avoidable cost will be the variable cost we'll be incurring, or we will no longer incur, and any specific fixed cost. General fixed costs will be incurred whether it is shut down or not. So that is not considered in the decision. So under shutdown decision, we are going to be looking at the foregone revenue and the avoidable cost. If the revenue we will lose by shutting it down exceeds the cost savings by shutting it down, then we continue. We don't shut it down. But if the revenue is less than the cost, let's shut it down in that case. So that is the concept under shutdown decision. Again, there you have to be mindful of your English because that is going to be crucial, and you have to be knowing that. And we are applying the marginal costing principle there. Then the good old throughput accounting. Now, as I said, if you remember, throughput accounting is not necessarily under short-term decisions, right? However, what we are doing is that I'm bringing it under that because of the limiting factor issue. So throughput accounting here, we are interested in throughput. And throughput is selling price minus direct material cost, because in throughput, in the short term, the only cost that is variable is the direct material cost. All other costs are regarded as factory cost. So labor cost, factory overheads, that will be added into factory cost. And that is the idea. And so if we are supposed to calculate the throughput accounting ratio, that's going to be the return per factory hour. If you remember, return per factory hour over cost per factory hour. Now, the return per factory hour, the numerator, is your selling price minus direct material cost divided by the usage of the limiting factor per unit. Then the cost per factory hour is the total factory cost divided by the total factory hours of the limiting factor, and we get a throughput accounting. Remember, we said if the throughput is greater than 1, we continue to produce the product. If it is less than 1, we stop producing the product. If it is equal to 1, we need further investigation. However, we can improve the throughput. And we discussed that the variables we use to arrive at the throughput must be adjusted. So selling price must be adjusted upward. However, we must consider the market we are in, the elasticity of demand of the product. That is going to be crucial in that particular case. And then we can deal with the direct material cost, renegotiate with the supplier, use an alternative supplier, buy in bulk to enjoy some discounts. All these are ways we can reduce direct material cost. And then the factory cost can also be reduced in that particular case. Those are the things we must understand under throughput accounting. Then our favorite guy there, break-even analysis, a lot of concepts coming in there that we need to be mindful of. Remember, we solved a short-term decision question where break-even was built into the story. I've forgotten the name of the question, but the question we solved where there was option 1, option 2, option 3. That kind of short-term decision question with break-even embedded inside, got to be mindful there. Remember the concept under break-even based on the context of the question. So, for instance, calculating break-even point in value, the default formula will be your fixed cost over contribution per unit times the selling price. That's the default formula. But if we can calculate contribution per unit, then the break-even point in value can be fixed cost divided by contribution to sales ratio. And remember, if we are looking for contribution to sales ratio and we have variable cost to sales ratio, then our contribution to sales ratio will be 1 minus the variable cost to sales ratio. So you need to know how to play around these issues here as you are going into the exam, or depending on the context of the question at the end of the day. Please give me a sec. So those are the issue there. So break-even analysis, shutdown decision, throughput accounting, relevant cost analysis. What else do we have in the archive? Limiting factor analysis is there. Make or buy, right? It's also there. Should we make the product in-house or buy it outside? That has been asked by the examiner before, though, but who knows? He can bring it again. So, principles are principles, so you got to learn them in that particular case. So in the short-term decision side of things, these are the issues we need to be mindful of principle-wise. And I hope that by now, like you have generically the principles underlining each of these short-term decisions. Like what I mentioned under relevant costing, what I said under the shutdown, what I said under the throughput accounting, what I said under the break-even analysis. I hope you have these things down like that with the principles coming on, because as I keep on telling you, nobody cares about the questions you've solved. 99.9% of the questions you will see in the exam hall, you've never seen it anywhere. In other words, no amount of question can really say you're going to prepare you for the exam hall, because in the exam hall, you are applying principles. So you've not seen the question before, the structure, the context, the grammar, everything. You have not seen it before 99.9% of the time. So it's about understanding the principles and then reading the question, calming down, and being able to answer that in the exam hall. So that is our short-term decision. Okay. Also 20 marks coming in, management accounting, that we need to be mindful of. 2 of them will be in the exam hall. Theory, 1, calculation, the other, that examiner will want to pick your brain on. So you want to be in a better position to address them. But technically, you're applying the marginal costing principles there under the short-term decision. Let me do one more, then we can go because my time is up. I got to leave you people to go and sleep for tomorrow. In the public sector, we have the other public sector issues, accountability, and those issues, which is also 10 marks coming in the exam hall. If you remember, this is where we are talking about the role of the Auditor General, Public Accounts Committee. So those people, one of them will be in your exam hall, okay? The role of key public officers, AG, who the heck, Internal Audit Agency, Public Accounts Committee, Parliament as a whole, even Controller Accountant General, and the various institutions, their role in audit, the role of Audit Committee, okay, internal auditors. We discussed this in class. I told you to read on them. The examiner can ask you these things that we need to understand there. In that additional 10 marks public sector area that we need to be mindful of as we go into the exam hall. So that is that additional 10 marks area about the Auditor General, the role, the constitutional provisions for the Auditor General, the role of these people, okay? And then the generic audit procedure issue in the public sector. Those are the additional 10 marks area that we need to be mindful of. So on a done deal level, ethics 10, audit procedure 20, audit reporting 20, governance 10, types of public sector audit, accountability issue 10, and that adds up to 80 in the exam hall, done deal coming up. The other 20 marks area is going to be the other issues that we have in the syllabus, those introductory issues that we spoke about, all right? Talking about professional liability, okay? Quality control, all right? So remember to learn about, go through those things again, professional liabilities, quality control, and then you come to the non-assurance services that we discussed, due diligence, forensic auditing, review of prospective financial statement, group audit, sustainability audit, then some IT issues, as some current issues like the things we did in corporate reporting. Those of you in audit, you have done that in corporate reporting. So all those skirmishes will be the additional 20 marks area. And if you look at it well, you realize that that additional 20 marks area has a lot, because we even have audit planning and risk assessment issues even coming in there. So that additional 20 marks area has a lot of issue that you have to know about, some of which I've mentioned: professional liability, quality assurance, acceptance of engagement, due diligence, forensic accounting, review of prospective financial statements, group audit, sustainability auditing. All those guys are the additional 20 marks area that the examiner may throw at you in the advanced auditing assurance class or exam that you need to be mindful of. So let me draw the curtains on audit, then I'll go to MA, and then we wrap it up for tonight. So in the auditing, as stated here, and if you remember what I said to you in class, when you get to the exam hall, take time to read all the questions. Okay, read all the questions. Remember, I've told you, go with a calculator, because if you have to do materiality, then you have to calculate the materiality of the subject matter under audit procedure or even under audit report if we are looking at the type of opinion that can be issued, and we have to calculate materiality. So please go to the exam hall with a calculator as much as possible. And so you're going to read through all the questions. Okay, you read through all the questions. And then you start with what you can do best first. I don't know, but the ethics could be easy for you. Audit procedure could be easy. Audit reporting could be easy. Corporate governance could be easy. Heck, the type of public sector audit could be easy. I don't know. Okay. So when you get there, read through all the questions. Don't just read question 1 and you start work, Debbie. Take time, read through all the questions, and then start with what you can do best first. Yes, we know ethics will be there. We know audit procedure will be there. We know audit reporting will be there. We know governance will be there. We know types of public sector audit will be there. But which one do you start with? It depends on the context of the question. So read through all the questions well. Then number 2, make sure you write your answer in the context of the question. Okay? Write your answer in the context of the question. Very important in that particular case. And some of you, you've experienced this during our test session as we were in class. Writing answers. Make sure you're not digressing. If it is audit procedure you are writing, don't write something that cannot be feasible, that cannot be undertaken. It should be specific, direct, straightforward. And as I mentioned, as much as possible, all your answers must be in simple sentences. Okay, simple sentences, very important. If you are supposed to explain certain things, then you write the point, then you explain. Please be mindful on the amount of information you have to give the examiner, because sometimes you can get goosebumps to write a lot of useless things that are not necessary, right? And then other times also you may write less than you are supposed to have written for the question. So stay within the ambit of the question and write your point and express yourself well. Avoid repeating the same thing, because sometimes some people are writing a lot, but it is the same thing you are repeating, but you are just rephrasing it. It's the same thing. You are just wasting everyone's time. So please stay within the ambit of the question and write out your answer in the context of the question. Third key takeaway I would tell you is that 15 minutes to stop work, drop your pen, and go over the things that you have done. Okay, review your work. I know you're not going to do it, but as always, in the realms of the spirit, that is my job, I have to tell you, so that everyone is aware, everybody knows, it's on record, everywhere that I told you that. Review your script before submission. Which means if you hear get ready to stop work, put the pen down. This is a written paper. And some of you have experienced this after sending your script and we are reviewing together. You wondered whether you were the one who wrote the Banku English and sent to me. You wondered. So please, when they say get ready to stop work, I know you are going to lie to yourself. Oh, Nhyira, this is the time the thing is coming. Oh, it's coming. Oh. Put the pen down. Try to read the things you have done, because it is a written paper. In your head, you are saying something, but probably not everything you are saying in your head that has actually been inscripted. So please, review your script, because if not, if grammatical expression, like the sentence, there's no meaning in it, au revoir mon ami, your spellings. Au revoir, mon ami. So please review your script before submission. Then certainly you make sure that you work under time. So you move with speed and accuracy, certainly in that particular case. So you're going to move with time at the end of the day. So in advanced auditing assurance, these are the things that I'll tell you. Read the questions thoroughly. Write your answers based on the context of the question. Simple sentences. If you're supposed to state and explain something, then make sure that you are writing the point down and explaining. But don't be too much. Don't repeat, rephrase things. Go direct and answer the question. Review your script. And then speed and accuracy in that particular case. There is one more thing that I'll add, but it is applicable to both subjects. So let me talk to you about that as I bring the MA people also up. Now in MA, where is my MA slide? So in MA, this is part of the theories, budgeting, this. All of these are the thematic areas. Then certainly those other theory issues that we spoke about, if you remember. So please make sure you take time to read them, okay? Those theory areas such as these guys, value chain, benchmarking, total quality management, just-in-time system, right? The ethical issues is what I discussed with you earlier. Then sustainability and IT. Those are all some of the theory areas in addition to the specific theories under the budgeting, variance, short-term decision, public sector. So in addition to the theories under those specific topics, these are additional theories that the examiner can throw at you as well. Remember, management accounting, as I've told you, the strategy is simple. When you get to the exam hall, again, read all the questions thoroughly. Just read through all the questions. You read through all the questions. In that case, very important. Number 2, you start with the theory questions. Okay? Start with all the theories. The questions that will not require you to do any calculation, do them. There is only one rule. The rule is that do not answer 2 different questions on the same page. In other words, you can't answer question 5A and question 3B on the same page. No, you cannot do that. But question 1A, 1C can be on the same page with 4 lines difference. Okay, 4 lines, leaving 4 lines as a space for A, and then you come to C of the same question. But you want to start with the written questions. We don't know what the examiner is going to do in July. Maybe the examiner will do 70-30, meaning 70% computational, 30% workings. Or he will want to do 40-60, 40% theory, 60% calculation. We don't know. But whatever be the case, we know there is above 20% of the questions that will be written for the management accounting examination. So you want to take them out as quickly as possible. Then from there, you can come to those other written aspects, and you want to start with what you can do best first. That is why I said read through all the questions. Okay? Because this is the trap. You know, in management accounting, maybe you see the question 2, which is going to be budgeting, I think so. And you are like, yeah, I could do this. It's a functional budget, easy peasy. So you open your answer booklet, whatever the heck. Let's say question 2, right? So you wrote question 2 there. Okay, yeah, you can do it. You go to the requirement. They say the sales budget. Yeah, I could do it. Production budget, I could do it. Then you start reading the question. Remember I told you in the sales budget, there is only one adjustment that can be made. That adjustment is about the selling price. So you have to be careful because they could tell you how the selling price is increasing or reducing about the sales budget. So you read it and you don't get the understanding. Then you're like, Vim, we move. You continue to read. Then you realize that the thing you are doing is not flowing. Yeah, okay, let me stop this. Let me go to question 4. The public sector, something. I've seen something there. When you do that for 2 times, your spirit you start panicking and you start failing the exam. So that is why I said, take time, read through the questions thoroughly, take out all the theories, then start with the calculation ones, the ones you can do best first. Very important. And then you have to work with speed and accuracy. Management accounting, your time is not going to be enough for you. I know, definitely. Okay? Your time will not be enough for you. That is why you have to take out all the theories first. So you can save some time from there and come to the calculation part. But you will be working on behind time. So please, you got to move with speed and accuracy. On the overall of these will be the 3 things that I mentioned yesterday and that I'm also going to tell you today, that as you go to the exam hall tomorrow, 3 things you must guard: your emotions, okay, your spirit, and then your mind. These 3 things, okay, are things you need to guard very well at the end of the day. Yes, the emotions can be linked to the mind, but I intentionally separate the two in that case. Why is this important? Something is going to happen to some of you. When the question paper comes, immediately you receive the question paper. Some of you, by virtue of just the question paper hitting you, something is going to hit you. And then all of a sudden you will start panicking. All of a sudden it's like you are afraid. Just calm yourself down. You have 10 seconds to kill that spirit. 10 seconds. So when you start feeling that funny fearful or anxious feeling, just put the paper down. You got 10 seconds. You count 1 to 10, boom, kill that spirit in 10 seconds. The reason why that is important is that if you allow that to fester, it is going to destroy everything. Remember, when you are panicking, your brain doesn't work. Everything you learn, boom, you cannot remember. So you want to make sure you are calm throughout the 3 hours. How are you going to do that? That is what you're going to do. You are calm during the 3 hours. Because you see, passing the exam is not just about inshallah, vibes and inshallah you've learned. What is going to happen in that 3 hours? In your mind, in your emotions, in your spirit, is very crucial. It's very crucial. So if you're not able to control yourself well, then you will end up going to fail the exam. So for instance, you get to the exam hall, as you flip the question and you are reading, Nhyira has said, answer all written questions first. But something is going to come on you, and you're like, oh, what a variance question. Very simple. Let me start with that. Hold up. Then you started with a variance question. From there, then you go to another calculation question. And you're going to spend significant amount of time on these questions. By the time you realize, get ready to stop work, and you've attempted like 3 questions, you're on the maybe 4th question. And you've not written any of the theories. Then stop work. You're on your way going home, as I say all the time, or you get home after freshening up, something is going to tell you, my daughter, go and pick the question paper. Then you're like, oh, I'm done. You say, hey, go and pick the question paper. You go and pick the question paper only to see that there were some theories. Whilst you were struggling with the variance, struggling with the budgeting question, there were some easy peasy theories that you didn't pay attention to. Yes, at that point, you know you have failed the exam. Only that you won't say it, but you know you have failed. And that is where people sometimes will blame the ICA that, oh, ICA is difficult. No. You couldn't control yourself in the exam hall. You didn't follow instructions as prescribed. So please, man accounting is a crucial paper. It's easy, but if you don't adopt the best practice strategy, In the exam hall, you don't control your emotions, your spirit, the state of your mind. In the exam hall, by the time they say stop work, you've attempted 3 questions. You're already down because 3 questions means over 60. What is the probability that you will get it? You will not. You will not. So please, if there is anything I want you to take away, in addition to the principles we've gone through, is the guiding principle that I've mentioned to you, especially management accounting students. Please, when you get there, throw everything aside, read through all the questions, answer the theories. When you finish, come to the calculations. Then you are working with speed and accuracy. Guard your emotions. Guard your spirit. Guard your mind. If you start feeling anxious, 10 seconds. Just count 1 to 10. All is well. As I keep on saying all the time, if maybe you are spiritual, you want to say a prayer, you got 10 seconds. This is not the time you're going to be blowing in tongues for the whole period. Okay? Got 10 seconds. You can say a prayer calmly to calm whatever the heck spirit that is, that fear, that anxious spirit that is trying to take over you, because you are giving the spirit of love, sound mind. Okay? So you cannot be anxious. Okay? So please, on the overall, that is what I would say as you go into the exam hall. There is no fearful that should chase you into the exam hall. Don't allow certain things into your life. Don't even say it with your mouth. Okay? No fearful, no Satan. Yesterday I was telling the class, after the class, somebody was talking to me, and I was like, no, the devil doesn't know you. The devil is busy working on somewhere. He doesn't even know you exist. So please, deal with your issue. Handle it. I'm not saying, yeah, something cannot be thrown at you, but that is why you said you were a Christian. That is why you said you pray. That is why you said you have faith. So why will you allow something to be thrown at you? No weapon fashioned against you shall prosper, because he that is in you is greater than he that is in the world. So please, why am I emphasizing on this? Because that's 3 hours. Some of you, you may fail the exam, not because you don't know, but because that 3 hours, your emotions, your spirit, your mind is not in sync. But if you can control that, you will be calm and you will remember everything, and you can answer the question and you will pass the examination. So that's it about that. Wish you all the best as you go into the exam hall tomorrow, 9 a.m. MA people. Whatever the heck, 2 p.m. AAA people in that particular case. But as always, I'm going to be on standby, so if there is anything, you can hit me up with anything you want to pick my brain on. Please don't send me a question to solve for you, because I won't do it. All right? You know that. I won't do it. But if you have something you want to pick my brain on, you can ask me and I'll be able to assist you there. So that is it about that. We'll wrap up here today. Please go and sleep. Tomorrow morning, have a good breakfast. Get to the exam hall on time. If possible, be chauffeured, or you drive your own car, get there on time. If you're a trotro person, tomorrow, stop taking trotro, take the ride-hailing services, sit in the back, and just relax, okay? Just relax. Oh, Shira, the place I stay in the exam hall, Uber will charge me 100 Ghana cedi. That is expensive. But you will use 800,000 Ghana cedi and buy Weavon. But you can't afford 80 Ghana cedi Uber ride. That will give you peace of mind to the exam hall. But you go and buy Weavon 800 cedis and put on your head. You see your priorities. Tomorrow, chill, relax. The emotion, the spirit, the mind, you are preparing it. That's how it is. And it's not fair. You jump from one trotro, hey, mate. Another trotro, hey. By the time you realize, will life cry, bazaar? Eh? So that is it about that. So tomorrow, treat yourself very well and make your spirit, your soul, and your mind work in sync. I wish you all the best as you go. Those of you who will be graduating, we'll see you at graduation. Those of you who will be continuing up too, we hope to see you from next week. Enrollment is opening for the November examination, so you can actually register to start studying with our previous videos and the summary videos, live lectures starting in August. All right, by 30th July, your results will be out. So, be on the standby. Good night. We'll see you some other time. Bye-bye.